I am selling my Nio stock. I am not a short-term trader at all. My holding period when I purchase a stock is theoretically forever, so this, folks, is a really big deal. Welcome back to the channel, folks. This is Jason, Certified Financial Planner and host of Fighting Words Financial. Before we get started, folks, I have to tell you, because this is the internet, this is not advice aimed at any individual or group. Please do not accept this video as instructions to buy, sell, or hold any security. Do your own research and make your own decisions. Thank you. All right, folks, so we have to talk about Nio. It has been one of the best performing stocks on the market year to date, and it has had an epic run in its share price in just the last week as well. The Chinese electric vehicle manufacturer seems to have emerged from its near-death experiences in 2019 and 2020 in a pretty strong position, and it seems to be on the cusp of realizing a slew of company projects that it's taken on, those being securing operating capital, pushing vehicle sales higher, and bringing about some cost management efficiencies. Nio finished the week of October 16th, 2020 at $28.48 a share, representing an absolutely mind-boggling run of almost 1,000% off of 2020 lows from back in March. This latest upward tear on the stock price comes on the heels of upbeat commentary by JP Morgan analyst Nick Lai. Lai predicates much of his optimism on the accelerating EV market in China, noting that EV sales in general are taking off and accelerating at a blistering pace. Nearly 100,000 plug-in electric vehicles were sold in the largest car market on the planet, and that number represents 5.7% of the total market share of vehicle sales in China, and that also represents a 27% year-over-year growth over August of 2019. All of this is benefiting Nio in a rising tide lifts all boats type of scenario. Analyst Nick Lai raised his price target by 185%, up to $40 per share. Market penetration for new energy vehicles in China should explode to 20% by 2025 from less than 5% in 2019. He wrote this in commentary according to Bloomberg. Additionally, production costs in China for electric vehicles will reach parity with internal combustion engine vehicles by 2022 or 2023 as battery costs continue to fall. Morgan Stanley analyst Tim Hsiao also recently raised his price target, stating that Nio stock performance, funding access, and industry franchise together create a self-reinforcing momentum and make Nio an even stronger player to grow its operations and investment value. The gains in Nio's stock price were also accompanied by an increase in volume, showing increasing investor conviction in the upward move and growing interest on the part of institutional investors. This is reflected in the numbers as on average 3-month volume of Nio shares trading hands is about 110 million. And last week, close to 400 million shares changed hands. By Friday, the stock had gained more than 30% for the week. There are a number of upcoming events that could affect the stock price as well. The next thing that could decide the stock's trajectory is the October deliveries number, and that is due early in November. From reports, it's known that Nio has a strong backlog of orders, but it remains to be seen if deliveries can keep up with demand. Delivery of its third mass market vehicle model, the EC6, are ramping up, and another record monthly sales number is possible. The company began delivery of the 5-seater premium electric coupe SUV on September 25th. If we look ahead, Nio is going to be releasing third quarter results as well around mid-November, and analysts expect on average that the loss per share for the quarter is going to narrow from $2.38 all the way down to 18 cents. Revenues are expected to climb around 145% to $643 million. If we look even further ahead, the company is expected to unveil its next vehicle model on Nio Day. In fact, that's its 4th Nio Day, scheduled for January 9th. There is speculation that this is going to be a new high-performance premium all-electric sedan called the ET7. Now, all of this is fantastic news, and Nio looks ready to capitalize on their second chance, their resurrection from near bankruptcy in March. So why should I want to sell my Nio stock? Actually, I don't want to sell my Nio stock, but mostly at this point, I don't have a choice if I want to be a prudent investor. Let me go into that. I'm an early investor in Nio and bought a couple of months after their IPO, and have bought on dips pretty frequently over the last 3 years, usually in smaller amounts. Now, I bought Nio purely on speculation, a gamble, and not for its actual investment value, and I bought what I thought was a modest amount. And what do I mean when I say I bought it on speculation? When I bought my shares over the last 3 years, it was generally at sub $5 per share prices and in chunks of maybe 100 shares or 200 shares at a time, with some of the larger volume purchases happening in March of 2020 when everything seemed its darkest. I didn't start paying more than $10 per share until mid-2020. When I started buying Nio less than 3 years ago, it had a very unclear future. Very few sales, stiff competition in China, and they didn't really seem to have carved out that special niche for itself at that time. I told myself, hey, if I lose all of this money, it's gonna sting quite a bit, but it's really not going to affect my overall financial condition. However, all in the last year, Nio has learned to navigate capital markets, consistently raise funding, increase sales, and improve production and cost efficiency. Nio has become much less of a speculative bet, less of a gamble, and more of a real investment. Let me be clear though, Nio still doesn't have the volume of sales or production capacity to support its current valuation by traditional valuation metrics. It's called the Tesla of China, but it really isn't. It's a startup company. It isn't the Tesla of China. And it faces a massive challenge that Tesla never had to face in its first decade, which is competition. And there's a lot of competition in the Chinese EV market, and many of those competitors are actually better capitalized and have more production capacity and are going to face fewer supply constraints when it comes to battery cells because they either make their own or they have long-standing partnerships with battery makers. The Nio stock price you see today reflects in some baked-in optimism regarding the valuation for future sales and future production numbers, which, if Nio doesn't meet those expectations, is going to have a severely negative effect on the stock price. None of that, however, none of that news that I just talked about, either good or bad, has anything to do with the reason that I'm selling my Nio stock. I'm not going to be selling all of my Nio stock, let's be clear about that, but I am going to be reducing my stake in Nio because my modest speculative position that I thought was not going to be that significant has now grown by 1,000% in less than a year and has pushed the proportion of individual stocks in my portfolio way over a level that I'm comfortable with, and I'm just simply no longer comfortable with all the risk that I'm taking. Now, I've mentioned a couple of times on this channel that 100% of my investment portfolio is actually invested in stocks. I hold 0 in bonds, and most of my invested assets are actually in diversified index funds or dividend-focused ETFs. In my ETF portfolio, I'm looking for linear growth over a long period of time, and my expectations are in line with what a traditional stock portfolio returns. I expect to make, on average, 8 to 10% annual returns over the next couple of decades. These are my safe investments insofar as anything invested in the stock market can really be considered safe. These companies I'm invested in through these ETFs provide the products and services that we need and use in our daily lives. For the other 25% of my portfolio, I'm invested in individual stocks, and I'm most certainly not looking for linear growth. I mean, I'll take it if that's what I get, but what I'm really looking for and what I really want is exponential growth. This is the portion of my portfolio where I absolutely take outsized risks in hopes of outsized returns. I tend to be concentrated in technology and EV stocks. I invest in the companies that have ideas that are going to change the way we live. Companies like Tesla certainly, and possibly Nio, fit this bill. In 2020 alone, Nio, Tesla, and a few stocks that are not related to the EV industry have absolutely pushed the proportion of concentrated individual stock holdings in my portfolio over 50%, which is something that I'm just no longer comfortable with. Nio has grown so much that it's beginning to make sense from a risk management standpoint to take some of that gain, liquidate some of my Nio stock, and move those gains over into my ETF portfolio. I'm actually going to be doing something that I do for my tax-sensitive clients all the time, but I rarely do for myself because I almost never sell stocks. Between now and the end of the year, I'm going to be doing something called tax loss harvesting to offset some of the gains that I'm going to realize with losses in hopes of offsetting the taxes that come with realizing gains. Meaning, I'm going to sell some stocks that I have a loss in this year to match up with the gains I'm going to realize when I sell Nio stock. I don't want to let greed overpower the rational side of my brain and let my portfolio become so risky that a single adverse event limited to a single company could cut my net worth by double digits. It absolutely doesn't mean that I don't like Nio, or even that my opinion of Nio has changed for the worse. In fact, the opposite is actually true. I think Nio has made some tremendously heroic strides in increasing the likelihood of their eventual success this year. I mean, 2020 has really been a year of learning and improvement for this company. I'm still going to be very much long in Nio stock. I'm still going to own Nio stock. I'm very much a fan. Nio has a shot at being a $500 per share stock by 2025. I firmly believe this. And based on my analysis, I think if they only capture 8% of future vehicle sales in China and 5% in Europe, they're easily going to be worth $500 per share. A lot of folks watching this video are probably in the same boat that I am. A modest investment in Nio has turned into a large chunk of your net worth because of the near 1,000% gains that you might have experienced this year. I'm not saying that you should absolutely follow the same strategy that I am. Perhaps, though, you should consider reducing your risk. Anyway, folks, these are just my thoughts. Let me know how wrong you think I am in the comments below. I look forward to seeing you guys again. Thanks, and have a nice day.